Hello guys, this is Pedram Raufi and you're watching the markets review. During this program we're going to check the situation which we have on the stock market, and of course we're going to check all of the main forex pairs, gold price, oil prices, and of course the cryptocurrency market main currencies as well as Bitcoin and Ethereum. We're going to check what kind of news background we have, and of course we're going to check the technical charts of our platforms of MT4 of our broker, and of course we're going to see for day traders, so what kind of solutions for trading for day traders we can find, and actually we're going to give some prognosis of the price movement during the week as well. As you maybe heard about the new mutation of the virus and the Omicron appearance in the world, we had just yesterday the first case of the new virus spread infection in the United States of America. And as you already remember, the White House have already said that it's not going to close the country. It's not going to be any lockdowns, and in the United States, despite, for example, European countries like Germany, like Austria, despite this policy of these countries, United States and White House already said that there won't be any lockdowns. And as we can actually see the impact of yesterday's news of first case found of the new virus, mutated virus in the United States, S&P 500 and Dow Jones Industrial Index have been fall after the realization of this impact on the markets. And the situation which we have for now is just a continuation of a really moderate downward movement of stock market main indexes, which could continue. But there is some prognosis and analysis from JP Morgan and from the other analysts that say that oil prices and stock market prices maybe in the near future could start to rise, and they could start to rise really fast. Why are these analysts say something like that, or why this kind of prognosis exists? And the main reason is that the new mutation of the virus, which names Omicron, it makes the virus to spread easily, but the severity of the virus is kind of getting lower and lower. And this scenario, it was the scenario of which many different doctors and many different clinics already said that due to science, the factor of virus spreading, when virus starting to spread faster and its effect getting lower and lower, and the severity is getting lower, this fact means that the virus pandemic is kind of getting to the end. It's kind of really near to the end. So despite the latest Federal Reserve chairman statement about faster tapering or faster hiking of the interest rates of United States banks, despite all of these factors, they have an optimism which is continues, which is going to continue, and this factor maybe won't let index price, United States stock index prices, and of course the oil market to fall so deep. So there is really scientific and logical optimism nowadays on the markets. So most of the midterm traders or midterm investors really for now have to just wait for this negative impact which is continuing to actually, which is continue now. We have to just wait for it, and maybe later just buy the dip as some of analysts are telling that there would be a really interesting moment to buy the dip, as JP Morgan strategist actually said. That's an article from yesterday. And as you see, JP Morgan's and some of the other analysts are already telling that there is a suspicion that market in the near future could really start to go higher again, to start the bullish trend again. So all the midterm investors and traders have to know that here we have a situation which could really change in the near future, despite United States Federal Reserve System faster tapering or faster interest rate hiking. Despite all of these factors, they have an optimism which exists, which continue to exist, and all of these scientific, logical factors, they actually exist, and we are talking about them. So you would know that situation on the markets could really change in the near future. As you all know, the opposite correlation of United States dollars index with the stock market indexes, and as you know, all time when the stock market indexes are rising, the price of dollar is getting lower, and the opposite, when the price of stock is getting lower, the dollar price is getting higher. That's an opposite correlation which exists. And here, as we already said from previous week, that dollar is getting near to the reversal, is actually forming a reversal pattern near to 97 or 96. About the range of 97, 96, we are observing a formation of probably of expanding volatility formation or a signal of the next reversal of dollar, which means that the prices of S&P 500 and Dow Jones in the near future could really start to hike again. Due to the 4-hour chart of S&P 500 and due to the 4-hour chart of Dow Jones, as you see, we are really getting near to a last support range which exists on the chart. So for S&P 500, this is a mirror level of 4,500, which have already get retest with a really impulsive candle, with a really abnormal candle, which could really mean that in the future we just need to wait for some strengthening above 4,580 or 4,600, and after the strengthening of price above this level, we could be more sure about the start of the bullish trend. But before this strengthening, actually situation here would be more looks like a continuation of a correction of the continuation of a consolidational movement. So situation here in the near future could look at maybe the price of stock market index of S&P 500 and Dow Jones would kind of start to consolidate, to make some consolidational corridors near to this local supports which we observe on the charts of 4 hours time frames or daily time frames. Today's candle opened, S&P 500, today's candle opened a little bit higher than the closure of yesterday's candle. So today we have a probability of the continuation of upward movement for S&P 500, and of course for Dow Jones situation could be really as the same. So 33,800, 33,600 are the ranges that could get retest in the near future. There is no no suspicion about this fact that prices of stock market, prices of oil even, and the stock market indices could really go deeper, could really go lower. But as you know, we are all waiting for reversal. So when this reversal happens, and when again the stock market indexes could return to this upward movement, and oil prices could really return to the upward movement and continue to rose to $100 or maybe 150, that's a factor which we have to just wait for. That's a scenario which we have to just wait for. Let's go and check the main forex pairs: euro, pound, Australian dollar, and New Zealand dollar. What is going on with these pairs? And before we start to check them, let's just check a little bit lower scale time frame of dollar prices. As you see, dollar prices are retesting a mirror level or the mirror range of 96.20, 96. Before we get above this range, the probability of the continuation of downward movement of dollar indexes is higher. But if we get stuck under this range, under the range of 96, 96.20, the probability of the continuation of downward movement would be higher. So let's don't forget about dollar indexes and the probability, and this scenario of dollar could really show us what would go on with euro prices, with pound prices, Australian dollar, and of course the New Zealand dollar to United States dollar pair. What we have here, due to the chart of euro dollar, in the 15-minute chart, as we see here, we have a consolidational movement which is continuing, and mostly in the midterm, we are observing the continuation of upward movement. Continuation of upward movement, a really midterm reversal, which have started about 16th of November, and it's continuing. And what kind of situation could we get today? For today, unfortunately, the economic calendar is really empty, and the only release which we could actually pay attention on is the release from United States, which is actually related to the job market, the initial jobless claims, which is unfortunately getting higher. So here is a negative factor for dollar to maybe start or just make some downward impulses, make some bearish impulses during today's European session or even American session. So due to this factor, maybe it could be more logical to think about buys when we are above 1.13. Here and now, there is actually very good momentum to start buys due to the situation which we have on the chart. And you have to be careful. The 1.13 is a really psychological level, and the retest of psychological levels could make prices to go really volatile and to make some really crazy movements, which could make you get stop out or something like that. So here, due to the consolidation, due to this accumulation of the price which we have here, which we have above this psychological level, we could maybe be more sure about the continuation of upward movement in the midterm, but between this range, the day tradings could continue as well. Intraday tradings could continue as well. This range actually, 1.13, 1.1340. And for pound $2 pair, we actually have some situation which should show us that prices are getting stuck under 1.33, which is a psychological level as well, which is a target level as well, which we have 1.33 here and 1.34 here, 1.32 it's like here. So this level, which is now get retested from downside, is a really target level. It's a really psychological level due to the scale of day trading, due to the scale of intraday. So the next retest of this level, if it would be impulsively, and if the closure of next candles could be under 1.3320 or 1.3315, if we get next candles closed under this level, it would mean that we could start the short positions. We could actually start the short positions. But due to the situation which we have nowadays with dollar prices, as you know, the dollar made his upward impulse. Stock market indexes made just yesterday, they made their downward impulse. And after this kind of movements, we actually get some consolidational movement or a moderate reversal. We could get a moderate reversal. So due to this correlation thing, due to the correlation of stock market with the United States dollar and its impact on the Forex pairs, we kind of have to say that the scenario of the future could really be more looks like the moderate strengthening of the price above 1.33, above 1.3320. So this is a scenario which could really continue to happen. And due to this factor, maybe you should more think about the midterm opening and closing of the positions, which means that you have to make more, we have to take a bigger stop and actually take a target for a bigger profit after a breakthrough or a retest of important levels and important supports which we here have. 1.33, 1.3260 are real, maybe main support. 1.3280, 1.33 are the main supports above which we need to just get strengthened, and then we could actually talk about buying position, long positions. Australian dollar and New Zealand dollar are actually show us that they are consolidating as well. But the continuation of downward movement here could be under question, could be under a big question, because here we have a really amazing reversal, very fast reversal patterns which actually have formed after the retest of a level 0.71 for Australian dollar and after the retest of 0.68 for New Zealand dollar. We have a really fast reversals which happen. So here, if we're just talking about the continuation of the risk factor, as we know, the first case of a new mutated virus in the United States could really make stock market to go a little bit lower, despite the highly impulsive downward movement, which just stock prices made last night. But due to all of this factor, we just need to know that maybe the midterm, just turn our short-term tradings to midterm tradings, and just make just take a bigger stop and target for a bigger profit would be a better solution to then, for example, try to get something, get some profit from this really fast and sharp movements which could really in the near future happen during this between these corridors which you have 0.6830, 0.68, 0.6820 are actually the range that could really retest it in the near future. But the continuance of upward movement here looks, in the midterm, looks more logical. And despite all of this, we could get some downward impulses as well. Downward impulses which could really end by the retest of 0.68, 0.6780. So here we are talking about the range of the risk for long positions, for buying positions. What is going on with commodity, with gold prices, with silver prices? And as you know, the commodity always rise on some fears. But the situation which we have now is that commodity is not rising, and maybe the only reason is that Federal Reserve System just said that he's going to taper faster, and he's going to hike the interest rates maybe faster than they said already. So here the gold prices could really be under pressure, but the main factor of technical analysis now is telling us that the retest of $1,770 could make prices to maybe reverse for a moment. It actually could make the prices to reverse for a moment. And if you are maybe more bearish to this situation, you have to know that the next level of the retesting is 1,760, which could get retested, and 1,750 is the next target of short positions. But you just really need to be careful. Due to 30-minute chart, due to 15-minute chart, we really need to get stocked under the level of 770. So if we are not getting stocked above this level, and if we are retesting it really impulsively, like here, with a really impulsive candle, this could mean that prices are going to maybe reverse, or maybe they are going to continue the consolidational movement. So your short-term selling positions won't maybe get their targets as soon as you want. And of course, the silver prices, as we said from previous time, prices have stocked under $23, and this factor was the signal of the continuation of downward movement of silver prices, as we said from previous time. And the situation which we have now is the retest of a really far support, which could really continue in the near future as well. And the potential of next downward movement could be till $22.10 or $22.20. We just need the prices to get stocked under these levels. But if due to the 1 hour chart or 4 hour chart or 30-minute chart, if we get retest this level, 22.20, 22.15, if we get retest this level by a really abnormal candle, by a really big red candle or bearish candle, this could mean that prices could really reverse after this kind of impulsive downward retests of really far support. So you just need to know that here we have a potential of downward movement, but maybe you could really, it would be better for you to get ready to get into some long positions in the near future. United States dollar to Swiss franc and United States dollar to Japanese yen have already returned from the base, have already returned from the local supports, and here 113 is a really great level above which we could buy, under which we could sell for United States dollar to Japanese yen. And for United States dollar to Swiss franc, situation is continuing inside the channel, inside the horizontal channel, which is a consolidational movement. Here we have a mirror level of 0.9220, and this situation with this mirror level could really continue as well. So the next strengthening above this level could mean that prices are going to continue the upward movement. If we get stuck under this level, this could mean that maybe in the near future we would observe the continuation of downward movements. What is going on with oil prices? As we said, continuation of downward movement, that's one thing that we are observing now. But as well, you have just pay attention to the convergence which we have here. You can see here is a convergence, and it's a real kind of a midterm convergence which we have, which is continuing. It doesn't mean that prices won't get deeper, won't go deeper. It means that prices could really even retest $62, even they could retest $61. But if this retest would be impulsive, and if this retest would be with a 1 4-hour candle, with the one big 4 hours candle, or with the one big daily candle, this would be a really great signal about a reversal or about next moderate strengthening of the price. As you know, the JP Morgan is telling that prices of the oil could really continue to rise. Due to the news background, the OPEC Plus group is going to actually kind of comforting the Biden's policy. And as you know, Biden's policy was to just release all of the oil reserves which countries have, so they could kind of fight the energy crisis. But OPEC Plus countries are not really going to do it. So this factor could maybe help oil prices to continue to rise. And the factor of the risk which we have now, the Omicron, the new virus mutation, is not that serious as scientists are telling, due to the not serious as it was when we had Delta variant mutation spread. And because of all these factors, maybe the optimists could really return to the markets really soon, and sooner as you think. So I think for oil market, for the United States stock indexes, we are observing the last downward impulses. We are observing the last downward movements and last fallings. And in the near future, we could really observe a next reversal. United States dollar to the Canadian dollar as well. It actually stopped its upward movement after a really impulsive retest of local resistance of 1.28, and before we get above this level, we could actually continue to sell the pair. And if we get above this level, if we get strengthened above this level, we have to pay attention. Are we getting consolidated again? Are we going to get consolidated again, or we are actually continue the upward movement in a moderate upward channel after the strengthening above 1.28? So it's a very important factor about the breakthroughs, about the breakouts of the top of the market, or the local minimums or local maximums. After this kind of breakouts of local maximum or local minimums, we just need the price to not get less volatile. We just need the price to not get consolidated, or to not actually form lower and little sized candles, because this could mean that the price is kind of losing its amplitude, and this factor would mean that this breakthrough was not a true breakthrough. It was a breakthrough which kind of could cause a next reversal. So here we have a situation which could be really looks like a reversal. But if you're working with this, if you're trading with this, you have to know that because of the fear factor which we have now on the markets, you just need to take a little bigger stop losses, so you won't get the stop out. What is going on with the Bitcoin prices and Ethereum prices, the main cryptocurrency market currencies? As we observe, $57,000 have been break. This level was a really important level, and this level is through testing. And as we said in previous previews, that the price of Bitcoin and Ethereum could really continue to rise, especially the Ethereum prices could really continue to rise due to the situation which Ethereum has. And Ethereum is more powerful than Bitcoin because of some news background and the technical background of Ethereum, new updates in the system which help the liquidity of Ethereum to get lower, and this factor really helped the market of Ethereum to price more and more. So the Ethereum prices is kind of really look really good for next upward impulses, and Bitcoin here could make some upward impulses as well. But here $57,000 is a really important level after the retest of which we could get dumped. So here for Bitcoin situation could be a little different, but don't forget that $57,000 and its retest could make prices to get dumped again, especially if we get some low volatility after the strengthening above this level. Now we are kind of strengthening above this level, above $57,000. But if the volatility gets lower and the amplitude gets lower, and the candles here show us that they are kind of making some consolidational movement like here, it won't mean that prices are going to go higher. So here you should really be careful. If we get some consolidational movement, it needs to be with a pressure to the top, with the pressure of the candles to the local next local resistance of 58 or 57,800. Thank you for watching this video, guys. I wish if you have some questions or any comments, you can actually comment them under the video. Don't forget to subscribe on our channel and ring the bell so you would know what kind of programs and what kind of maybe live programs in the future we could have. So don't forget, like the video, share it, and subscribe on our channel and ring the bell. Till next time, guys, have a good tradings. Bye-bye.